What is going on, everyone? My name is Jeff, so let's talk about some good news. One of the few good pieces of news that actually took place today in the stock market. One of our favorite stocks, and guys, going back to January when Roku traded down to $30, that's when I made a strong buy recommendation on this stock. They reported earnings today, ran up $18.25, roughly 28% return in one day on strong earnings and guidance. And I've been looking it over, guys. What an incredible quarterly earnings report Roku put out. They are far more dominant, I think, than the entire tech space, and retail investors really want to give them credit for. And keep in mind, guys, this big run was in the midst of the trade tariff fear. And so now the market is overly bearish and selling off almost every day. So this might have been $22, $23, maybe even $25 gain if the market was trading at a more normal clip. So we're going to go over the earnings report. Guys, I'm going to give my opinion if you should be buying Roku here on these $80 levels. I think most of you probably know the answer to that. I'm a long-term investor. I've traded Roku a couple of times, but I also have a long-term position, and it is looking very, very good. But do me a favor, guys, go ahead and drop a like on this video. I appreciate any and all support you give, and make sure to subscribe to the channel if you have not done so already. I have plenty more videos coming, and I don't want you to miss any content or updates. So Roku beats on quarter one GAAP EPS by 17 cents. And their revenue of $206.7 million, that beat by $16.9 million. Now I can take a quick glance at that and tell you the beat on revenue is somewhere close to 10%, okay? Because 10% of 200 million would be 20 million, and of course 16.9 is a little shy, but they did beat on revenue, like I said, somewhere between 7 and 10%. That is outstanding, guys, and is very, very rare. And so if you want to look at that from a marginal basis, beating on revenue by over 10%, very, very good job done. Roku is such a beast on earnings time and time again. And a couple of highlights from the guidance. Of course, revenue rose 51%, boosted by heavy platform gains, and gross profit was up 60%. I find this very funny because Roku took so many downgrades this past quarter from different companies and analysts, and I thought they were absolutely out of their mind simply because Roku is very good at forecasting guidance and then outperforming it. So I did not quite understand all those downgrades that were coming in for Roku. I'm sure they will get hit with a couple more just to push that stock price down. Probably have some investment firms that are short on this company. I don't know. Sometimes it makes me wonder. The company's active accounts metric jumped 40% to 29.1 million. Now, I remember on the last earnings report, I can't remember the exact number, but I think it jumped about 28%. So this was another really big jump on active accounts. Streaming hours were up 74%, and average revenue per user rose 27%. The revenue breakout, of course, on the platform was $134 million, and on the player was $72.5 million. That metric up 18%. And let's take a look at quarter two guidance. This is probably actually the most impressive thing of the entire earnings report. So it's guiding revenue to $220 to $225 million, and that is above the $219 million estimate. Net loss of $30 to $25 million. EBITDA of -10 to -5 million. For the full year, it's raising its forecast for revenues to $1.03 billion to $1.05 billion, and that's marginally ahead of the $1.02 billion estimate. Now, guys, this is some of these downgrades that I was just referring to a minute ago. Goes to tell you analysts don't know it all. Like I said, do not be surprised if some more downgrades come out negative to Roku. But as you can see, going back to February and ending in April, Roku took 5 downgrades, either from neutral to sell, buy to neutral, hold to sell, or outperform to neutral, okay? And so if you would have taken these investment firms' advice, like I said, you would have missed out on this huge earnings report. Like I said, the motivation is still there to invest in this company because guidance was so outstanding. So I don't really understand the argument some of these companies are making. Other than that, the bigger tech giants are entering the same space and do compete directly with Roku. But outside of that, you cannot deny their growth and you cannot deny their guidance. So now let's talk about if you should be buying Roku on these current levels they're at. Like I said, guys, it made an all-time high today, traded all the way up to $83.17. And this is the first time Roku has entered that $80 level. So I have the 6-month chart pulled up on Roku, and of course back in January this was a $30 stock. If you would have bought at the $30 level, you were getting close to a 200% return in less than 6 months. That is pretty good return. But on this $80 level, guys, let me tell you exactly how I feel about it. If you are a trader and you're trading Roku, or you're buying call options and selling out, I would go ahead and sell here, and I would not get greedy. Like I said, some of the follow through and some of the post earnings rally, it might get itself up to $85, maybe $87 a share. But as you can see historically, usually it makes a high and then it usually trades back down for a period of time. This is a very volatile stock on both sides of the fence, sometimes on market volatility, sometimes on downgrades. So if you're trading Roku or you bought call options on them on this last tick down, like I said, I would go ahead and sell pretty soon. Take your gains. Guys, stick to that rule. Do not get greedy, okay? Anytime you have some gains, don't be afraid to take them. Now let's talk about if you are a long-term investor. Now I kind of wear both of these hats. I think Roku is a great stock to trade. Also think it is a great stock to own. So far it has taken pretty good care of me. Now if you're a long-term investor, I don't mind you buying here at this $80 level. Just keep in mind, I do think it does trade back down to the 70s and possibly the 60s again. And also, depending on the results of this ongoing trade war with China, the market might get very, very volatile. And as we all know historically, Roku is one of the most volatile stocks on the market. Like I said, right here, back in October of last year, Roku was at the $74 to $75 range, and that was making all-time highs until the big correction of October through December come. So just keep that in mind. Roku went from $76 all the way down to $25. So a lot of volatility here. And anytime this stock does make an all-time high, it usually corrects for a period of time. So we could see it staying here at the 80s for the entirety of the week, maybe the next couple of days, and just a little bit of that post-earnings syndrome where a stock will stay kind of inflated for a while. Just do not be shocked if it trades back down. If you're a long-term investor, I would probably wait for another dip, okay? But I also don't have a problem with you starting a position here at $80 a share. If the guidance and if the earnings is any indicator at all, Roku is very, very undervalued, and I do not think it will be long before this one is well over $100 a share. But anyways, guys, that's all I got for the video. Make sure to go down to the comment section. Let me know if you are a Roku shareholder. Again, a lot of people will probably go short or buy put options as Roku keeps taking out its all-time highs, simply based on the amount of implied volatility this stock does have. But for a long-term investment, guys, Roku is an absolute winner, and I still think, based on the guidance, it is a buy on any dip and pretty much any chance you get. Thank you as always for watching the video, and have a great day.